interviewing about mergers and acquisition. So I'd just like to know a little bit about yourself, Phil. Do you want to explain to our listeners who you are, what you do, and where you work?
Absolutely. So I work for a firm called PEM. We're based in Cambridge, established in 1875. It's the oldest and largest firm of accountants in Cambridge. My colleague Lake Faulkner, he set up PEM Corporate Finance back in 2004 as effectively the division within PEM that carries out mergers and acquisitions. Prior to 2004, there were kind of general practice partners who would dabble in corporate finance activities, but there wasn't anyone who kind of specialized in that area. So Lake rolled into town in 2004. I joined him in 2017. Prior to that, I spent 10 years at RSM, which is a national firm of accountants, top 10 ranked in the country. Pretty much doing corporate finance and mergers and acquisitions, advisory, bits and pieces. I spent a couple of years, 2 years with BDO in London. So when I was at RSM, I was kind of based, it was a nationwide remit really. I started off in Nottingham, but worked in a Birmingham office, Milton Keynes, did some bits in Reading. I was just all over the place on a national basis. Did a couple of years at BDO. I worked in industry as a finance director, just shy of a year. But effectively, the vast majority of my experience, Joe, has been company sales, acquisitions, management buyouts, strategic and succession planning, raising finance, and business valuations as well.
Fantastic. And I think, for me, mergers and acquisition plays a huge part of growth plans of larger corporations.
Yeah.
And why is that? Why is it mergers and acquisition strategy?
I think it's a really good question, Joe. Studies showed, the McKinsey group, a massive research group, they've actually listed 6 reasons why the pursuit of acquisitions makes sense from a strategic perspective. Now, things like if you're a business and you're looking to improve performance of the target company, so that's pretty much central to a private equity house, right? Obviously, they want to deliver returns for their institutional investors, but also they tend to invest in companies that their performance is a little bit shaky. They come in, they improve performance, and they sell on for improved multiples because they've improved the performance of the company. So that's one strategic reason. Consolidation within a marketplace to remove excess capacity in the industry. We see that a lot in the software, IT industry and sectors of the like. When there's excess capacity in the industry, consolidation then happens. That's a good strategic rationale. The acceleration of market access can be a good reason for mergers and acquisitions. If you're a company and you're trying to gain access to another adjacent marketplace, but it will be too costly or too time intensive to just build something up from scratch, making an acquisition could be an easy way into that industry. Gaining skills, gaining technologies that you wouldn't ordinarily have access to if it weren't for an acquisitive exercise. That's obviously a good strategic driver. Why? Exploit a company's industry-specific scalability is always another strategic reason. And when I say scalable, that's when a business grows, and the larger it is, the more profitable it is, because it keeps its cost base quite limited. So if you can access economies of scale rather via an acquisition, then you can do that. And when you see the big boys like Google and like Facebook and other kind of IT related industries making acquisitions, it's usually because they're trying to pick winners early and develop them and grow them and help to kind of leverage their own existing capabilities to create what's known as a unicorn. That's always another kind of rationale for for why M&A is a good strategy. So you can see it's kind of multifaceted, Joe. There are loads of different reasons why M&A is good.
Yeah, and I think you've got lots of experience with this, massive experience in those acquisitions. And and how did you become an expert in this field?
You're too kind, Joe. I don't know whether I'm an expert, mate. I don't know if I am. But I'll put it down. I'll put it down to three things. I think it's academics, it's appetite, and it's experience, right? So if I go back to my early days, I did an accountancy and financial management degree at Loughborough, and then straight after that, I went into RSM as an entry level graduate, and just continued the learning that way, really. I got a corporate finance qualification from the Institute of Chartered Accountants through England and Wales. I'm a member of the Chartered Institute for Securities and Investments, and those two are kind of badges of distinction. Basically, just say that I've done loads of exams and I've crammed a little books into the old noggin. And I'm also currently studying MBA because I like to be stretched intellectually, and I like looking at business conundrums from different perspectives. And I said three things. So academics is one side of it, but experience is another. And I'm really fortunate that I've worked in places that have given me a wealth of experience. Not least PEM, where over the last 4 years, crikey, I've drafted over 20 valuations. I've done 13 deals. I've led them, and the team have done more. So we're seeing lots and lots of kind of acquisition, M&A activities, sell mandates, valuations, and I get to pick up bits and pieces on along the way. And I guess finally I do it because I love it. I love the variety. I love helping clients. I get an actual buzz out of doing it. And so all of these things kind of feed into the pot. I wouldn't call myself an expert, but I'm an enthusiast, that's for sure. Yeah.
Well, you're definitely an expert in my book. I think one of the complex things about any organising deals, traditionally, how the companies finance and structure these deals, and that's one of the biggest questions that especially in the business world. So, can I ask you that question? How do they normally do that?
Yeah, for sure. It's a really interesting question. I think it's multifaceted, and I don't think there's a right or wrong answer, Joe. If you think about how a company is structured, a company's capital structure is effectively debt or equity, and to acquire a company's shares, you need capital funded either by debt or equity by way of cash. So if we use a simple example of a management buyout in terms of structuring, a buyout can be self-funded. It could be self-funded if there's surplus cash on the balance sheet, and by surplus cash I mean cash that could be dividended out by way of a special dividend, and it wouldn't have a detrimental operational impact on the company. So it's a surplus asset, for want of another phrase, that could be used as part of a management buyout. Then the ongoing cash generation, the ongoing profitability of the business going forward could also be used to structure a buyout. You can obviously structure a buyout with financial backing from the bank, or equity backing via private equity. There are many different ways to kind of skin a cat when it comes to structuring, but it really does depend on the individual situation, really.
Great. And I think we've got a lot of local business people watching us today. And what advice can you give to them if they're looking to sell their business, maybe, or looking to buy a business or a competitor or something along those lines? How could you help them?
Cool. So if I focus on the sell side first, if anyone watching this is looking to sell their company, the first thing I'll say is get your businesses in order. Get your business in the best shape possible as early as possible, in terms of your operational outlook, in terms of your financial outlook, and in terms of your strategic planning. Have a map. Have a roadmap in terms of where you are currently and where you want to get to. In terms of financial planning, make sure that you have good reporting, whether that's management accounts, whether that's cash flow management, and making sure you're documenting these. Make sure board meetings are minuted, so you've got a backward-looking reference for conversations that have happened at board level. Identify any potential leadership successors early. Identify them so that you can, when it comes to selling, separate yourself from the business, because that's always a method for price chipping from a buy side perspective. Either price chipping or kind of maintaining your involvement post completion, kind of a 2-3 year lock-in, really, which is not really what you want. You want a clean break as quickly as possible. In terms of activities I'm seeing in the marketplace, I'm seeing scalable businesses with well-developed strategies continue to attract lots of acquisitive interest from buyers. So if you've got scalability in your business, in terms of the more you grow, the more profitable that you are, make sure you're able to document that easily, so that there isn't any reverse engineering when it comes to negotiation. Yeah. On the buy side, again, it's quite similar in some aspects. Have a plan. What do you want to buy? Why do you want to buy it? How much can you afford off your balance sheet? What's your debt capacity like in terms of taking on debt funding from the bank to go out and make an acquisition? Can the deal be self-funding in the way that I kind of laid out earlier on in terms of an MBO having excess cash on the balance sheet? Can that be used as part of structuring, really? But I guess, and you'd expect me to say this, Joe, I guess in both scenarios, it's important to speak to an advisor who can give you a steer, particularly when it comes to valuation and process as well, because I've seen a lot of DIY deals that eventually come to us because either the buyer or the seller got into it thinking they could do it themselves, and frankly they took their eye off their business effectively. So you want to be able to separate that and focus on either continuing to grow or looking for acquisitive targets, and leave the actual deal structuring and deal doing to people who do it day in, day out for a living.
Definitely. And I think one thing that I suppose talk about is it's not all about multi-million-pound deals, is it? I mean, smaller businesses can sell their businesses and take advice from people like themselves. And I think it's really, really important if people looking to buy or sell is to get advice from the likes of PEM and others in the marketplace. Because again, as you said, it will stop issues happening in the future, won't it?
Absolutely.
So I suppose the last thing, Phil, I mean, it's nearly the weekend, so we obviously we want to let you go. But one of the things that kind of I found this really fascinating. I'm sure a lot of the audience. Now, how can they get in touch with Phil? If they do want to talk to you privately, what's the best way of contacting you and your company?
So the best way for me directly would be email. That's Philip with 1 L at PEMCF.com. Phonetically Papa Echo Mother Charlie Foxtrot.com. Alternatively, check us out on our website www.PEMCF.com. We do occasionally take drop-ins, and hopefully we're able to have drop-in meetings once we're all allowed out and we're all vaccinated by AstraZeneca if the doses remain in stock. So we're a couple of minutes from Cambridge railway station. We're on Station Road in Cambridge, and would love to kind of have a coffee and have a quick meeting to find out your strategic objectives and see if we can help.
Fantastic. Well, look, Phil, I mean, one thing I'll say is thank you for coming on today. Really enjoyed our conversation. Forward to speaking to you in the future. So have a great weekend, and thank you for your time.
Cheers. A real pleasure, Joe. Thank you.